Hello everyone, this is Martin. It is Saturday evening and I'm producing this video update for you for the upcoming week. We're talking about November the 30th, which is the Monday, and all the way to December 4th, and that is on the Friday. So for that entire week, that's what we're looking at, trading opportunities. And last week it was kind of a soft week as far as trading is concerned. We had the American Thanksgiving on Thursday, and trading was pretty light for some of the currency pairs. It also did produce some trading opportunities and profits, and we'll show you what I mean by that. Um, and for the United States, Thanksgiving is a huge holiday. Not like Canada. Over there in the States, they celebrate events with a lot more gusto and brashness than we do. They're very proud of their heritage, and Thanksgiving is certainly part of the American heritage. So it's certainly celebrated much more than we Canadians. We're a little bit more laid back, and so that's why trading was just a wee bit on the light side. I think things are really going to pick up over the next couple of weeks as we head toward the Christmas holidays. So let's take a look, and we're going to start first with the US Japanese yen pair. You can see that right here. And last week, again, we're looking at this first vertical red line. This was the Friday, the end of last week's trading, and the beginning of last week started with this first candle right here. So here's the end on the Friday's close, and then we have the Friday close of last week that just happened. You can see when I was looking at the currency pair, the candle right here, the little black candle was just below the 8, and I basically mentioned that wait for bullish evidence and buy. It kind of went nowhere the next couple of days, went down here on the Tuesday, and this candle right here, this white candle, was the first bullish evidence. Even if you would have placed a trade at the open of the next day, you would still be even right now or in profit slightly. And your stop line, again, it's a low risk trade. If you would have entered right there at well, I'm sorry, right there at this candle, which is because you have to wait for the bullish evidence, which is right there. If you would have entered here and taken the what we taught you in the course, your stop loss would have been just below the either the 8 or the 21. I'm sorry, this is the 50. This is here the 21 EMA. And so your stop loss would have been like, minimal 20, 30 pips or something like that. And there's no real risk, okay? And so not much happened. If you're still in a trade, stay in there. I believe we're in an uptrend continuation. And if you haven't entered a trade yet, I would certainly look at entering just above the 123.10 mark right here, 123.10 level. Again, you're watching in the next couple of days, watching 122.30 as support. So if price comes down here, watch to see if price bounces up and gives you another bullish evidence. Then take a buy trade, okay? So we're still in an uptrend continuation. Now we go to the US Swiss franc. You can see that right here. This is the US Swiss franc daily. Last week, okay, it ended the following week it ended on the Friday here. Last week, this is the trading here. So with this candle, we've got the Sunday, Monday here, Tuesday, Wednesday, Thursday, Friday. You can see that. Okay, last week I said uptrend. We're caution near resistance. We really were not near the 2015 high, so we were still quite a ways away. I said note that the Friday's close was an inside bar. Okay, so Friday's close was right here, and this white candle was an inside bar to the previous day's black bearish candle. You see that? And according to some of our trading methodology, if you would have entered a trade just above the high of the this black candle, or this black candle right here, you would have been in profit by now. I also said buy on pullback at the 101.50. So if you would have waited till price would have pulled back at the 101.50. It actually happened on the right here on the Tuesday close, or even on the Wednesday, you would have made about 155 pip profit. Okay, and how we look at that is, let's say you would have gotten in right there, and I did mention buy on a pullback to the 101.50. So if you would have gotten in there, your your aggressive stop loss could have been just below the 8 EMA, and if that was the case, then your stop loss was very, very low. Let's take a look. So your stop loss would have been only about 22 pips. It actually went up for 121 pips, and even more if you would have kept the trade open all the way to 170 pips. So easily a 1 to 4 risk to reward. That means for one part of risk, you would have made 4 parts reward. So really fantastic opportunity on this pair right here. Now, for this week, we're looking for an uptrend. We're still in an uptrend. However, I'm going to say kind of don't trade this pair for the next few days. Caution, we are at resistance at the 2015 high, okay? So you can take a look back in your charts to the left side, go back to the beginning of the year. We've reached almost a 2015 high. Most likely it will go higher, but I'm going to suggest wait for a small pullback, then wait for bullish evidence to go back in on the trade again. Okay, so that's my suggestion there. Now we get to the US CAD. Very sideways trading between the US and Canadian pair here. You can see at the week before Friday close, we closed with a huge white up bullish candle. It closed above the 8. It closed above the resistance here, the gray rectangle. So the price is also above the 21 EMA as well as the 50. So everything looks like all systems are heading north. And as long as it doesn't go all the way to the North Pole, because Santa's certainly going to get a surprise if price reaches all the way to the North Pole, but that might be a very good surprise, and Santa may reward all of us. In this case here, price after on the Sunday Monday trading right here with this huge white candle with the huge upper wick, it went all the way up and almost reached the 2015 high, so it almost tested that, but came down, and that means the sellers came in, pushed price back down. Sellers did not want the price to go any higher than this area of resistance, so sellers came in, and then on the next day, more sellers came in and pushed price all the way back down. Then traded sideways throughout the Thanksgiving weekend holiday. And the great news is on Friday. Here's the big clue: it's a bullish engulfing candle. It's also a warrior candle, and I almost am going to suggest that you can pretty well take a buy trade here. Your stop loss could be just below the 8 EMA. That's the aggressive stop loss. Your conservative stop loss would be below the 21 right here. So if you're taking stop loss below the 21, and if you get in right there, your stop loss will be approximately 95 pips. Look for 95 pip right there. Reward, so that's 1 to 1, okay, and or you can just wait for a bit of a retracement, maybe 20-30 pips, then look for a bullish evidence to the upside. So that's my suggestion. Last week, like I said, we kind of just went sideways a bit, and we would have made uh, a pretty good profit on the first day of trading, because I did say take a buy trade or wait for a small pullback, and you would have made at least a 1 to 1, because on the Friday close, if opening a trade right here after the like for the Sunday Monday open right here, if you would have placed a stop loss just below, right away on that first day, you would have the first day of the first day of trading, which is the Sunday right here, Sunday Monday trading, you would have made your profit margin already. Okay, so now we get to the New Zealand USD, and here Um, Last week, it kind of just here's the close of the previous week on a Friday. You can see it kind of just went up a little bit, but did not really close above the 50 SMA, and now it is bounced right back down off the 50 with a pretty good clue. Here's the bearish candle, black candle. It also closed, not only did it close below the 50, and the 50 held as the resistance, it also closed above the, see this 8 EMA. So I'm pretty well, pretty well. You can almost take a sell trade right now, or if you want to wait until price breaks through the 0.6515 level right there, you can wait for price to do that. But we are in a downtrend continuation. I believe price is going to go lower. Okay. Next, we've got the Australian US dollar. This has been one of the strongest currency pairs over the last couple of weeks. Previous week to that, you can see it started about here, went up to here, and then continued even going higher here. So it was a big mover in total over 2 weeks, and now we've reached a resistance and it's turned around again. So we're bouncing off of resistance, but notice, see this dash line right here? That is the 100 simple moving average. Price is kind of just closed right in this kind of almost neutral zone. You have to beware right now because price is kind of just where everything's converging. All these, you can see all these moving averages. Here's the 21. Price is still above the 50. So price being above the 50, I'm saying wait for price maybe to come back down lower. But it may come all the way back to retest this area right here, 71.50. Then look for either bullish evidence to the upside to take a further trade to the upside, or wait for price to break through and below the 71.50, and then get ready immediately to take a sell trade, because then price is going to come down all the way to test at least this lower trend line. You can see that right here, okay? Trend line here, one touch, two touch, three touches right here. It's a good, good probability trend line. So price, if it breaks down, it breaks this zone right here, it's going to come right down, or it should come right down lower, okay? And again, remember the 2015 low is still right here. Next, we've got the British pound USD. Here, this has been one of the biggest losers over the last couple of weeks. Price started here and it's come down, 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 down. It's testing the support zone right here. Take a look to the left. You can see the previous valley. You can see the valley. Price came down and then bounced up. Here, price coming down. It probably will bounce up a bit, and before continuing its downtrend, it most likely at some point this week or in the next few days may come down and test this bottom lower trend channel line, or this trend line. So I'm saying that we're in a downtrend continuation, but wait for a bit of a pullback first because we are at support. So don't try to buy into support. Even though it was a bullish, I'm sorry, a bearish, a warrior candle, you can, well, if you do take a trade, it's a it's a high probability trade, because you can actually place your stop loss then, I would say, right about halfway here if you want to do that, or just above this warrior candle. So if you take a buy trade right now, place a stop loss right about here, or just wait for price to pull back and then look for bearish evidence to the downside. Okay, and finally we've got the Euro USD. This has been one of the biggest losers. It's already gone down in the last 4 weeks, about 732 pips. That's a big drop. It still seems to be going lower, so this week we're in a downtrend continuation. Wait for a pullback, maybe just wait for a wee pullback, and sell when you see further evidence to the downside. Watch the 8 EMA to hold as resistance. That is this little blue line right here. If price closes above, then price is going to go higher. But if price bounces off of this 8 EMA, it's going to continue lower, and I believe it's going to go all the way down to the 105.20 or even lower. If it breaks that, lower than that. Take care, everyone. Listen, send me your questions and inquiries. Happy trading.